Hello there, my friends, and welcome back to another episode of TA with MK. My name is, you guessed it, Steve. Just kidding. But on a more serious note, it is the last day of April today, at least where I'm at here in the United States. It's the evening of April 30th. Bitcoin has obviously had a pretty productive month and a half. We're going to talk a little bit in this video about kind of where we stand as far as this rally goes. What can we maybe expect to begin May and kind of transition into the summer. We're going to look at a few different charts that I often will look at once every month or so, just to kind of get a feel for what the general market sentiment is, just to give myself a better idea of where the market may go from here. Now, if I look a little bit like I've sweating my you-know-what's off, it's because I literally am. Where I'm from, it's starting to get pretty warm. We don't really have a spring where I'm from. We go straight from very, very cold winter to very, very hot summer. And I kind of feel like that's what we're doing right now, or at least that my body's not prepared for what kind of weather has suddenly been upon us. Been outside doing some yard work because I was behind on that. So if it looks like I've been stranded in the desert for 14 days and I could use a drink of water, that's the reason why. That being said, we're going to go ahead and dive into today's content. And as always, if you haven't already, please do me a huge favor and remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. Now, the first place that we're going to start is ironically going to be also where we kind of end today's video. Today's going to be more of a macro outlook. Like I said, it's the end of the month. I just kind of wanted to get my general opinion out there on kind of where I believe we're at, where I think we're going to be going, and so forth. And so we're going to start on the Bitcoin weekly chart just to kind of preface, where we were and where we are now. Basically, what got us to this point, and then at the end of the video we'll talk where we think we could go. So the first thing I want to talk about is that dating back to the all-time high that happened in November of 2021, which was obviously just under 70K, about $68,000, almost $69,000, right? We basically began this long downtrend, which you can see is represented by this trend line that I've drawn, where we were rejected on 1, 2, 3 occasions, basically from the all-time high all the way till October of 2022, so about a year later. November, October, about a year later, it broke out of that, essentially retested it, and then at that point, the low, or at least the local low, or what we believe could be, or at least I believe is the macro low, at about 15,500-ish, we'll just say, somewhere around there, depending on your exchange. And at this point, we've been on a pretty good rally now for, let's see, you take that low to kind of where we are now. It's been about 175 days, which is, about half of a year, just about. And then our percentage gains, or at least how much we are up right now from the lows, sits right about, 90%. So clearly that's very, very impressive. Anybody that happened to have timed that low, or at least near it, is in significant profits right now, almost a 2x, which on something as big as Bitcoin, is hard to do. Now, I would be willing to bet that the majority of people probably didn't catch that exact bottom, unless they are just DCAing into long-term positions, which a lot of people do as it pertains to Bitcoin. But, I'm sure there were some people that did. But anyway, that's really not the point of the video. But that being said, basically, if you bought any time, during this entire, I guess, summer till the end of or till the beginning of 2022, you're in profits right now. Bitcoin's up, like I said, around 90% as it stands right now. The peak of this current rally actually saw it go up about 100% almost. In fact, about 110% ish. If you go from the bottom of that wick low, right around 100%, because we basically we were at 15,500 and we reached 31,000 or a little bit above, which of course would be a 2x. That being said, I've been on record, and I'm sure a lot of people have understood that with this kind of upside move, that a pullback of some kind, like an extended pullback, is definitely something in the cards. But the question is, do we have another leg or another couple of legs left on this current rally? That's kind of what I want to look at in today's video. Obviously, the downtrend kind of saw, one giant impulse wave down, followed by a little bit of a recovery bounce, dead cat bounce, as some people call it, another, large leg down. then, a little bit smaller bounce, then some consolidation, one final capitulation, and then, kind of this little rally to the upside began. Well, in my opinion, to kind of determine that, at least with the way that I trade, which is very much swing trading, I'm not a big shorter term time frame trader. I'm not really a giant long-term investor either, other than, potentially some Bitcoin and Ethereum. For the most part, I like to look for big swings in the market, kind of ride those waves, and then DC my, in and my way out, kind of based on the larger time frame trends, like these, daily and weekly trends. So we want to talk about the key levels, that we think matter as it pertains to whether or not we're going to have another bounce, or whether or not we're going to see some sort of a more longer term, pullback, I guess, the bear market to continue kind of a thing. And basically what I'm looking at least the level that matters the most to me as it pertains to like a weekly chart, I've put an orange horizontal line here, and basically it's this level or this zone right around $25,000. And the reason why this level is so important to me is you can see that after we've had this, pullback, it was the first level that became resistance once. Then we had our capitulation down to our low price. Then we sought resistance again on 2 more occasions, essentially. And then we saw finally the breakout. Now, accompanied with that, which is why I think it's such an important level, we can see that this volume spike, which is the biggest volume spike, at least on the Binance chart, which is the chart that I'm on. It's the biggest volume spike that we've seen, and during this entire, bear market / transition to a, whatever you want to call this rally. Maybe it's just a bear market rally, but whatever you want to call it, you can't ignore that this volume spike was the biggest one that we've seen. So then as I clear back up the chart, I guess the question is, what do I take, or what do I derive from that? Well, it just kind of gives me an idea of an important area based on that volume. Now, one thing that's important to understand as it relates to volume is just because the volume may have ended in a green candle, it doesn't mean that that meant every single person bought, Bitcoin during that candle. It just means that the overwhelming amount of people that were, participating in that volume, whether it was buying or selling, were buyers. But essentially, it just means a lot of activity was happening for it to create, again, a volume spike, of that magnitude. So, of course, Bitcoin rallied from right around, $22,000 all the way up to 28,500-ish during that candle. But that means that entire area was just an area that the market in general saw as, an important area. Now, of course, if you kind of were to draw this little sideways, sort of you could call it actually like a bull flag at the time after it broke out of this little smaller falling wedge I have drawn here, kind of consolidated sideways. That was the area also, the bottom side of that anyways, is where the price essentially had bounced twice. So the market may have looked at that after it bounced the second time as, hey, this is a local low, let's go ahead and, buy Bitcoin, send the price higher. But really all that I take from it is that if Bitcoin is to pull back in the short term, the area that I think is the most important is $25,000, just because, that was the level we talked about that was resistance on multiple occasions. But it could, spike as low as like, it could spike as low as like $22,000 again, and I still wouldn't consider this rally over, but it wouldn't be a good look, because of the third reason we're going to talk about, which is the 200 moving average here on the weekly. So one thing that we can observe if we clear this back up yet again is if you see this yellow line here on my chart, this is the 200 SMA, or what's known as the 200 simple moving average. Generally, it's considered that on any time frame really, but especially higher time frames, if you're above this, it's bullish, and if you're below it and it's resistance, that's typically bearish. Well, this chart doesn't really have enough information, doesn't go back far enough, but clearly we'd been above it during the entire bull market, and then after we had the big pullback, we first got below it basically back in June of last year, right? And now, granted, we did get above it briefly, but we weren't able to close the next week following above it. We pulled back. This was during the end of last summer, August-ish. Then we kind of saw it act as resistance again in September, and we've just been below it ever since, until, again, this giant breakout candle, which saw a bunch of things happen at once. Broke 25K, broke above the 200 moving average. So where does that sit now? Well, it actually sits, if you look over here to the right, at $26,000. So kind of the way that I look at it, or at least the way that I would consider this rally, if we are to pull back in the short term, to be still, I guess, healthy and a good opportunity to possibly step in and buy the dip, would be if we could hold basically on a weekly closure $26,000. I want to see us hold wherever that 200 simple moving average is when we close. And on the lower time frames, which we're not going to talk about in this video, something like a daily, I'd prefer to see the 25,000 or just below, act as support. See us bounce, and by the time the weekly candle closed, I'd want to see us close the body. If we zoom in, you understand what I mean by that. It's not the wicks, but the actual body. I'd want to see the body of the candle close above that $26,000 level, because that would give me confidence that buyers were viewing that as just a bullish retest of the 200, simple on the weekly, and then I'd expect one more leg higher. Now, the next thing that I want to look at super quickly, it's a chart that I like to check in on, every once a month or so, or especially after we've had either a ginormous dip or a ginormous pump, is the Fear and Greed Index. For those of you that haven't heard of this before, I'll leave a link in the description to this website that I use. It's just alternative.me/a bunch of crap. But it takes you to a Fear and Greed Index to do specifically with Bitcoin and crypto, and it will just take, I don't even know exactly how it does it. I guess I can make a video about that, educate myself on exactly how it comes up with these numbers. I'm sure it's got some sort of a pretty sophisticated algorithm, but essentially what it's doing, or what it's showing the average person that comes to this site, is a score of kind of where we are, a score as well as, I guess a sentiment word as to where we are, what's the sentiment for the market. The more you are this direction, you have what's called fear, and then just different levels of fear. Obviously, right down the middle would be considered neutral. And then where you go to the right, as you get into the yellows and the lighter greens and then the darker greens, you have greed, and then you have, extreme greed over here to the right. And it just kind of gives you an idea of what the market sentiment is, and for those people that actually pay attention to this or have an idea of kind of how the market reacts, then you can decide whether it's a good time to buy or sell based on that. So even if you're new to this chart, I'm sure a lot of you that have gotten, been in the space for a while, or at least been in stocks for a while, have heard the phrase that you buy fear and sell greed. Well, the idea behind that is generally if everybody's fearful, price has been pulling back for a while, that often represents the best buying opportunities. And obviously, if there's been an extended rally where price is starting to get a little overheated, everybody's starting to, display extreme greed, or at least some level of greed, typically that's the time you want to take profits. I know my mentor always used to say that if you're excited about how well you're doing to the point where you're starting to tell everyone about it, some of your friends, your family, whoever it may be, that should be your own internal indicator that it's, that it's actually time to start taking your profits, or at least, monitoring and being a little bit more careful with any positions that you have open. So anyway, with that being said, what I wanted to quickly compare this to before I kind of end today's, video, just with my, kind of brief macro update on my analysis of what I think is going on in the market, we're actually going to hop over to the same chart, but a little bit more zoomed out, where it actually shows, I've clicked over to where I have the max, so this is like the entire history of the Fear and Greed Index, dating back to whenever they started doing this chart, which looks like it was February of 2018. I want to focus specifically on the bear market rally, not, because in a lot of ways I feel like a lot of people that have been in the space for a while think that that's all this is. I actually am another one of the kind of believers that most likely is all this is. It doesn't mean that I necessarily think that we can't go higher, and doesn't necessarily mean that I think we're going to crash all the way back down to the lowest prices. But I do think it's something similar to this move that we saw during the bear market back in summer of 2019, July, and then crypto pulled back. Had there not been, at least in my opinion, COVID, I don't think we would have saw a retest all the way back to the initial lows. That's just my own personal opinion anyways. I just think that Black Swan event was the catalyst for that. But we were already in the midst of a pullback. If you zoom in here, kind of a falling wedge. It had just broken out of it. I would have imagined that at that point we would have kind of saw a rounded bottom. Probably the lows, had COVID not happened, would have been somewhere back down. I shouldn't say the lows, but the retest essentially, or the higher low, probably would have been somewhere back down around 7K after it rallied all the way up to 13, 14K. And then at that point, we would have, in my opinion, again, we would have went upward and onward. But either way, that has been written in the history books. But if we clear the chart back up, what I was, I guess, wanting to focus on was what was the fear and greed index? What number was it at during the time of this rally? And, kind of where did it peak before we saw the major pullback? So overall, the rally from the bottom, we're just going to kind of generally take this. I'm not going to zoom in, but you can kind of see that we were just above $3,000 all the way up to just about just under 14K. And that represented about a 300% rally. Now, obviously, we're not going to get anything like that this bull run. In fact, we'd be at new all-time highs if we did. So it's not going to be the same. But the point mainly that I'm making is we saw a significant rally. In fact, maybe a better way to look at it is how far down from the high did we get before the rally ended? Around 30%, so that'll be relevant here in a minute and I'll explain, but from this rally's top to the top of that pullback was about 30% down from its previous cycle all-time high, the bull market that was preceded it. And then of course it pulled way back, but the question was, what was the fear and greed index showing at the top of that rally in June of 2019? Well, the answer to that can be found if we hop back over to this chart. We can see that right here where it says June 2019, if we follow that line up, we can see that at least towards the end of that month, which was the 22nd of June, it actually peaked out basically somewhere around 80, if you remember from where we were on the other screen or the other page, we're currently sitting at about 63. But what I wanted to kind of focus on is you can see that it actually had rallied up kind of in the beginning of May to around 76, which is even a little bit higher than we are now. And then it actually saw a pretty significant dip during the beginning of June, actually, clear back down to like 30 before rallying again to that 80 level. Well, if we look back on the chart, I would imagine that was actually this pullback that you see here. So it had rallied up, right? And then it saw, if we zoom in, let me do that really quick. But if you zoom in to kind of where the top of this little short-term rally was to where it pulled back, you saw Bitcoin rally from, like we said, just over $3,000. It comes all the way up to just under 10,000 at like just over 9,000, we'll say. And then it actually pulled back all the way to like 7,000. From a percentage standpoint, top of that rally to the bottom, it saw just within about a month's time almost a 20% pullback. If you just want to kind of, I guess, round it to the most easy number to understand or see. Well, if we kind of zoom forward in this chart, in a lot of ways, if we were to see a pullback, in the short term, in the next month or so, I know that historically speaking, May is not always the greatest month in crypto. I'm not going to talk about the statistics on that in this video, but just know that May generally is not great. Well, if we see a pullback kind of back to the levels I'm talking about, from this top to the bottom, what would that look like? Well, from the top down to say 20%, where does that put us? Well, somewhere between about 24,800 and lo and behold, $25,000. Again, I'm sure back over here when that happened, a lot of people probably thought the rally was over. And then at that point, it actually, of course, saw another big spike all the way up. In fact, it saw another 90% pump, cleared back up to just under $14,000 before ultimately, spending several months consolidating, going basically downward and sideways for a while, essentially kind of forming this little bit long-term end of the bear market, falling wedge, right? So one other thing I wanted to mention just before I wrap up today's video is not really going to be anything groundbreaking, like I said, just kind of giving some of my thoughts on the general macro, outlook of things right now, based entirely just on these important weekly levels and the fear and greed index. We'll talk a little bit more about this as kind of the week goes on, my next couple of videos. But anyway, the only other thing that has some confluence that I wanted to mention as to why the $26,000 area is so important to me is it kind of governs where I've believed all along that this upside rally could go. Now, I've been on record talking a lot about the $32,500 level just because that's important, but realistically, I had a measured move that was a little bit higher based on an inverse head and shoulders pattern. Now, if you zoom in, you can kind of see this pattern where we saw a left shoulder, the rejection at about $25,000. This would make the head, another rejection at $25,000-ish or just above, right? This would make the right shoulder, and then you have the breakout. Well, you can take the trend line and you can make what we refer to, at least with this pattern, as the neckline of the inverse head and shoulders. That's just the area where both shoulders touched, right? Before the breakout happened, the breakout being right here at about 25,600-ish, right? So that's actually just a little bit below 26K. But anyways, that zone, the reason why between 25 and 26K to me is so important is because this could ultimately end up just being a big retest as well of that pattern. So there's a lot of confluence between the 200 SMA that we talked about here on the weekly, just that being a horizontal level of, previous resistance, but now support, as well as this pattern. And this pattern has a measured move, which you find by going from the bottom of the head up to the neckline and then dragging that up to where the breakout happened or potentially happened. And that measured move is just under $36,000, which is one of the levels that I've been on record talking about for several months as being kind of where I saw ultimately this rally potentially ending somewhere between 32,500 and 36K essentially. Of course, give or take a few $1,000 based on how just how heated things get. So anyway, I just wanted to kind of leave you guys with that, just so you could kind of get an idea of why where I come up with the targets that I come up with, kind of where my mind frame was. Now I'll give you an update as the week goes on with a little bit more of this macro ideas. Of course, I'll put out some more of the shorter term updates as well. But I'll leave you with this final thought that I would not be scared if we can see this pullback that we're currently experiencing go a little deeper. 25, 26K again, kind of being the key zone that needs to hold, and if it does, I think that could represent, at least in the midterm or however you look at it, as a great buying opportunity for a potential rally one leg higher, somewhere between $32,000 to $36,000. Now, on the flip side of that, if that level doesn't hold and we were to close maybe something like a couple daily candles in a row below that, and especially if it closes next week's weekly candle below that, then I think you could look at it as a very, very great shorting opportunity, back down to some of these lower levels like 22,000 and probably at least a retest of around $20,000. And that'll wrap it up for today. I appreciate each and every one of you that have subscribed to the channel up to this point. And if you haven't, obviously, if you could do me a huge favor on the way out, please remember to do so, as well as like the video. We'll catch you in the next one. It's TIMECODES.